The question of whether to buy a car outright, finance a car, or lease a car has been a controversial one. And truly, if you don't choose the right option, you could lose thousands over time. Car is not an asset, car is a liability. But for me, car is a necessary liability. If you buy a car right now, let's say for $30,000, and you drive that car out from the dealership, if you come back with that same car like 30 minutes later, the value of that car will not be the same. It depreciates. So with this in mind, a conscious decision has to be made when trying to purchase a car. I attended a financial academy not so long ago where this topic was discussed and explained with numbers. And I also did my research. And what I found out was the difference in savings between financing a car, leasing a car, and buying outright was surprising. So in this video, I'll be showing you the analysis with numbers, but at the end of the day, you choose what works for you based on your situation. So there are three main ways you can purchase a car. Number one is buying it outright. That is, you make the full payment of the car, you take the car home, it becomes yours. You don't have to worry about bi-weekly or monthly payments. The second way you can purchase a car is by financing it. In the UK, it is mostly called hire purchase. Financing a car means you are buying the car with the money loaned to you by a financial institution, mostly banks. You can either finance the full cost of the car, that is making no down payments, or you can make a down payment between 15 to 20% of the cost of the car, and then you finance the rest of the purchase. Interest is added to the purchase, and then you make instrumental payments bi-weekly or monthly, over a period of time. And at the end of that period, the car becomes yours. The third way to purchase a car is by leasing. So this is just like renting a car for a fixed period of time, typically between 2 to 4 years, at an agreed monthly rate. Leasing doesn't require car loan approval because the payment goes towards the use of the vehicle, but not the ownership of the vehicle, as with financing. So you must return the vehicle at the end of the time, and there may be options to purchase the car at the end of the tenure. It all depends on the dealership. Now that we've covered the three options available for us to purchase a car, let's now compare the financial implications between the three options. For this analysis, I'll be using 2024 Hyundai Sonata. I choose to use this vehicle because I believe it's a medium-sized family car, and the price is $32,000. So I will start with a financing option. Let's assume we are putting down 15% of the cost of the car, that is $4,800. And now we are left with $27,200. Interest will be added to this amount because it's a loan, and the interest rate will depend on your credit score. If you have a good credit score, it should be between 5 to 6%. With a bad credit score, you should expect between 11 to 18%. This is why having a good credit score is very important. And if you want to know how to keep up with your credit score, have a video on that. For this analysis, I'll be using 5% interest rate and 4 years term. And after adding the interest rate and tax, the monthly payment will be $722. And in a year, you must have made a total amount of $8,664. So by the end of these 4 years, the total cost of carrying this vehicle is $4,665. And then the car becomes yours. Let's assume you want to sell this car after these 4 years. The market value will be determined by so many factors, like the kilometer that's been covered by the car and wears and tears, of course. And we know already that car depreciates in value. So looking at comparables in the market, we could sell this car at $16,000. So when you take away the cost of carrying that car for 4 years, which is $34,665, from the cost of selling this car, which is $16,000, so the true cost of the car is $18,665. So let's move on to the lease option. Assuming we put down a deposit of $2,000, it is referred to as a security deposit, and it is used as a collateral in case you default on payments or damage the car. So it is a form of protection for the leasing company, and this money is non-refundable. We are still using $32,000 as the cost of the car and also 4 years term. So the monthly payment should be $268 after the taxes and interest all put together. The difference in monthly payments between financing a car and leasing a car is because it is calculated differently. When you are financing a car, you are paying for the full cost of the car because the car will eventually become yours if you don't default. But for leasing a car, you are only paying for a portion of the car because the car will never become yours. So back to our analysis, your yearly payment will be $3,220, and by the end of this 4 years term, the cost of carrying this car will be $12,882, and then you return the car in good condition. Now let's look at outright buy option. If we buy this car at $32,000 cash, and after 4 years we are able to sell this car $16,000, this means that the cost of carrying this car for 4 years is $16,000. I hope you are taking notes of the numbers, because we are about to go into pros and cons of each of these options. Now I want to start with pros and cons for financing a car. So when you finance a car, you are hopefully going to own the car. Also, financing a car could improve your credit score if you make your monthly payments on time. This can open you up for more favorable loan terms in the future, like mortgage loan when you want to buy a house. Also, if you don't have enough cash saved up to buy a car, you can choose finance option. On the flip side, because of the interest rates, you will end up paying more than the worth of the car. It is also important to note that your car is used as a collateral. So this means that if you stop making your loan payments, the bank, which is the lender, has the right to repossess your car and sell it to get their money back. Then for leasing, yes, the monthly payment is usually low, but the fact remains that you never actually own the car you are driving. Once the agreed tenure ends, you are required to return the car in good condition, no wear, no tear. And if the car is not in good condition, it can attract some charges. Another thing to note is that every car lease contract is embedded with restricted guidelines you must follow. So make sure to read carefully. Example is mileage cap, which restricts you to an annual kilometer limit that you are expected to stay below. So with this kind of restriction, you will be mindful of how you commute. Now for outright buying, if you have $32,000 to buy a car outright, if you have $32,000 cash to buy a car outright, this means that you are locking down $32,000 for something that will depreciate in value. I think what you need to consider is if you put down $4,800 for the $32,000, for deposits, that is financing option. If you invest $27,200 balance, a fund like the S&P 500 at 8% return, is it going to be worth it? So you need to consider this. So here are my thoughts. If you go for a year-old car that has depreciated in value at the expense of the first buyer, you can get it for like $16,500 at 2.9% interest. If you make a deposit of $4,800, your monthly payment should be $306 and yearly payment of $3,672. So at the end of 4 years, the total cost of carrying this vehicle should be $14,688. Now, if you decide to sell this car, the market value should be between like $6,500. So the true cost of carrying this vehicle becomes $8,188. This is way cheaper. But if you decide to go for financing a brand new car, I think the real gain is when you keep the car for 5 to 7 years after you are done financing the car. Another great option is if you are on the building stage in your financial journey, you can go for outright buy for older model car like Toyota, which we know that is a strong car, and the price should be maybe below $10,000 or maybe $10,000. But make sure to check very well, check the car out very well to buy a good one so you don't end up wasting all your money in repairs every now and then. So you need to sit down and think through, and choose the best option that works for you based on your situation. You don't need to please anybody. Let me tell you, no one cares. Do you know that 76% of millionaires don't drive brand new car. But one thing I know is that most people don't want to worry about money for the rest of their life. But the problem comes when it's time to sacrifice for the life you desire. Anytime you give in to the life you want now, the life you desire gets pushed away. It's just like saying, I want a nice slim body, I don't want to be overweight, but now I want to eat all that cake, I want to eat all that junk foods. And you keep eating them, and the nice body you want will never come. That's the way it is, because your body never forgets what you eat, even though you may forget. And this is the same with your bank account. It never forgets how much you take away from it, even though you may forget. So you know your financial situation, you know how it is with you right now. So you need to calm down, sit down, and think through and choose the best option that works for you based on your situation. Please, if you find value in this video, could you please give it a like? Thank you so much, and thank you for watching this video. I will see you in the next one.